Welcome back. Kizito Dunze, trader at Don Lauren Merrifield, joins me now for an update on the money and fixed income market. Thank you so much, Kizito, for your time.
Thank you very much for having me.
It looks like the market at the fixed income and money market has also adopted a wait-and-see attitude, but then specifically for waiting for the outcome of the Monetary Policy Committee, which will announce a rates decision tomorrow. Give us a sense of what the mood was like today in the market.
Thank you very much for having me. The market, as you said, has experienced a latency state. Not much happened in the market. We noticed that a couple of instruments in the treasury bill market yields actually dropped a little bit, showing that there was somewhat of demand in the market to push yields higher. But that wasn't significant enough to see large shifts in yields. Maximum we saw a shift of about 13 basis points, which, given recent rallies and recent drops, is marginal. It's also worthy of note that about 19 of 34 listed treasury bills dropped in yield. So that's just a little above half per se. Also worthy of note is that the bond market also, the drop in yields for securities happened mostly on the shorter end of the curve. For securities of 8.5 years and below, we noticed a muted 11 to 17 basis points drop. For other securities above, we noticed also very slight increases in yield. So from the activities in the market and the direction and rate of shifts in yields, it's obvious that a little is happening, but not significant.
Now, Kizito, it's pretty obvious that investors are waiting for the outcome of the MPC meeting. We've pretty much established that. But then general consensus of the market is that as far as the MPR is concerned, the monetary policy rate, the MPC, members of the MPC are likely to leave the rate unchanged. So if the market knows this, why investors, or rather traders, not taking any chances?
Well, there's a general consensus, because we also at DLM are of the opinion that rates are most likely going to be left where they are. However, given recent comments accredited to the CBN governor, you notice that CBN governor said rates is premature to crash rates to single digits as inflation is just at 8.4. Now, there's a wide space between 12 and single digits. There's still space to play there. So in as much as, yes, most of us believe he would maintain, but those recent comments leave room for a little contraction to say by maybe 25 basis points will still be above single digits. However, as I reiterate, we expect him to retain at that level. And given that most people expect him to retain at that level, you just expect most traders to retain their status quo and see what happens. Nobody wants to be surprised and have an open position that will now be a headache to cover.
Okay, let's quickly talk about the Naira. The currency closed at 161.2930, 161.30 to the USD today from 161.29 previously. We also saw the Central Bank of Nigeria offering and selling $300 million US. Let's talk about your outlook for the Naira, especially ahead of the MPC.
The outlook for the Naira, most Naira traders are also in the same state as fixed income traders. Most people are playing the rates game. As you noticed, the Naira market, the Naira actually appreciated slightly. When it opened, it actually dropped to about 160.88 before it rallied back and closed at about where it opened. Speaking to traders, we are made to understand that certain flows came in and the Naira appreciated a bit, but the normal demand for the dollar pushed it back. If nothing changes, and the same flows that were responsible for making the Naira appreciate continue, then one would expect that the slide of the Naira will be stemmed at least for a while until new developments happen in the market to change the course of events. So we expect the Naira market to trade at about where it is right now or appreciate ever so slightly given the new demand pressures.